we're going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
This effort. And China has big plans for this. They intend to seed their digital yuan into the global environment by giving it away to visitors at next winter's Olympics. When they arrive at the airport, they're going to get yuan digital wallets. They're going to receive digital yuan. They're going to use it throughout their visits to Beijing, and then they're going to take it back to their home countries. They see this as a huge advantage. Why? Because who controls the underlying protocols, who controls the underlying standards of the future of money will control the future of money.
Now with more on the recent crypto swings, Kevin O'Leary, he's O'Shares ETF's chairman, a CNBC contributor. He's also at the conference. Are you there because you're a believer in Bitcoin, Kevin?
I'm actually an investor now in Ethereum and Bitcoin, but that description of the event is correct. It's chaos. It's Woodstock. I was there for 4 hours today. I'm hosting a panel tomorrow with all the public miners. There's really two worlds happening here, Scott. Number one is the Bitcoin environment and the debate going around Bitcoin, and the number one issue is ESG, as you just detailed. We can't seem to get the institutional client to allocate yet until we resolve the ESG issue. So that's going to be one of the discussions at the 4 tomorrow at the 10:30 public session. All around the periphery, the other 30,000 people are dealing with DeFi. And so the more volatility you get in Bitcoin, the more interest, contract, and yield you can get from DeFi with stablecoins. So you can now make a 9% interest yield, where you can't do that in cash anywhere. And that's the other half of what's going on here. Is the Bitcoin is still the number one gold in cryptocurrencies that institutions want to allocate 3 to 5% in, but can't yet because their ESG committees won't let them. And on the other side of this coin is the volatility giving you huge opportunities with decentralized finance. Yeah. You actually do smart contracts on the chain. And these are the things that I've invested in of late because I can't make 9% anywhere with my cash. I don't even make any money in a bank anymore.
Let me ask you this.
So
on that note, let me ask you this,
like crazy.
Let me ask you this. You obviously consider it a viable investment. And who knows if Elon Musk's tweet, latest one, was the reason that Bitcoin got pushed around. But what does it say about crypto as an asset class as a whole if it can be pushed around so violently because of the tweet of one alleged supporter?
Yeah, I get it. The way you have to look at it is that you have to make a binary decision. I believe in it for a long-term asset class to play as property, or I don't. So that's decision number one. I now do. It's been controversial, but I started in 2017. And now I'm saying to myself, look, I don't really care if a tweet from Elon Musk or anybody else can move it 38%, as long as I'm getting paid to wait. So I've decided I'm going to have a 3% weighting in Bitcoin. And now for the first time, Scott, because of all my DeFi investments, I'm making between 4.7 and 9%. The more volatility I get, the more I make. So I don't care, as long as I'm not trading and I'm buying it as property. I have a 3% weighting. I have 5% weighting in gold. I may move up to 5% in Bitcoin. But my point is, sure, there's vol, but vol is your friend if you understand DeFi. So look, Elon, tweet like crazy. Keep it up. I don't care. I'm not selling my Bitcoin at this price, or even if it goes up 100%, because I'm mining the yield with DeFi. I'm making money with the volatility. And that's what's different about last year. And by the way, this conference, Scott, let me put it to you this way. It's insane in there. I've never seen anything like it. I've never seen anything like it. It's rabid interest in Bitcoin. And maybe that's good, maybe that's bad, but bring on the vol so Mr. Wonderful can make some interest. I'm very happy with it. A salary is the drug they give you when they want you to forget about your dreams.
Welcome to the Crypto Teacher. And guys, I come back with that video just to make you think. And we have Bitcoin 2021 in Miami. And guys, we know this is all about exposure. But what are we noticing about Miami Bitcoin 2021? Is all the New World Order puppets are there. And we know how they do with the youth, the millennials, the Generation Z. They're creating the us versus them. The Hegelian dialectic, stick it to the man, but you have the man funding the whole process. That's the reason why it's so important for the elders to educate the younger generation so therefore they don't fall for the devil's tricks. And then also we have Rick from Blackrock. Now guys, this was back in January of 2021. So 6 months ahead of what we're going on right now, they already said they were moving into cash. And then also, what are we seeing? Gold moving up. Because we know when it comes to the New World Order, it's all planned out. Y'all have a wonderful day.
So you think that growth is going to be great, 6-7% you could do on GDP. You say the economy's flush, right? Supporting high levels of consumption, right? People have saved a lot. We're ready to get out. We're ready to spend a lot of money. You don't think we're in another 2000 tech bubble, but then why have you taken your cash level much higher than it was before? What's the message in that? Is that a looking for and expecting a correction and then wanting to pounce on that, or is it something more?
You guys do some pretty good diligence on our portfolio. So what are we doing? We're running much more of a barbell today. So think about portfolio allocation. Think about how you run your portfolios. Last year, we ran a lot of interest rate risk. You had the Fed that was easing aggressively. Interest rates were A great hedge. B, you were playing alongside of they're going to drop interest rates, they're going to purchase a lot of assets. Today, that interest rate exposure is not interesting at all. In fact, a better way to dull some of the betas, dull some of the risk in the portfolio is run more of a barbell, sit in more cash. By the way, it allows you to be opportunistic around situations that manifest themselves. Run more cash. Run more, and I think it was John who said it. You can actually use some of because volatility's come down. You could use some of the options market to get some of that upside exposure in with the lower volatility. Take off some of that exposure, run a higher level of cash, own some yield in the portfolio, but get out of the high quality assets I talked about. Investment grade credit in the front end of the yield curve, not interesting. Agency mortgages, not interesting. Munis today. I mean, how much money are we going to make on munis at 50, 60 basis points? So hold it in cash, be opportunistic, and dull some of the risks you have in the portfolio that way.
I'm glad you noticed we do our homework around here.